Support for today's episode comes from Amazon. Amazon is working toward a carbon free energy future, doing more with less, investing where it matters most, and supporting communities where we operate. Quebec is rationing the cheap power it once marketed. Quebec built its economic development pitch on cheap, abundant, 99.8% renewable electricity. That pitch just changed. The province's utility is now proposing to roughly double what new data centers pay, and the reversal says something executives evaluating any power rich market should hear clearly. For years, Hydro-Québec promoted the province as a haven for data centers. Low-cost hydropower, cold weather cooling advantages, and easy proximity to U.S. Northeast markets. That recruiting pitch is effectively over. In February, Hydro-Québec asked its provincial regulator, the Régie de l'Énergie, to approve a new rate structure for data centers that would raise prices rather than continue courting the industry on cost. The new rate is built to stop subsidizing data center growth. The utility's proposal would apply to any data center drawing more than 5 megawatts, MW, setting the rate at 0.9 kilowatt hours, 13 Canadian cents, roughly double what current large power customers pay. New customers would face the rate immediately if the Régie approves it. Existing facilities would transition to it over 5 years. Hydro-Québec is separately proposing a steeper rate of 0.4 kilowatt hours, 19.5 Canadian cents, CAT, for cryptocurrency mining operations, citing their energy intensity relative to their economic contribution. Both changes are slated to take effect in the second half of 2026. Hydro-Québec has pointed to Bloomberg data showing that in U.S. jurisdictions with fast-growing data center sectors, electricity bills for all customers have more than doubled over the past 5 years, and has framed the new rate explicitly as a way to avoid that outcome at home. Demand growth is exactly why this is happening now. Quebec's data center sector currently draws about 200 megawatts, and Hydro-Québec projects peak demand could rise to approximately 1,000 megawatts by 2035. That growth is arriving on top of a market Hydro-Québec is already managing directly. The utility has moved new projects above 5 megawatts into a selective approval process rather than automatic connection, a distinction that holds even under the new rate proposal. The same allocation fight is playing out in U.S. grid regions, where regulators are rationing queue positions rather than rates. Quebec isn't just charging more for the same access. It is charging more for access that was already harder to get than the province's marketing implied. The same fight over who pays is playing out in 23 U.S. states. Quebec's reversal is a sharper version of a fight already underway across the United States. At least 23 U.S. states have approved large load tariffs designed to keep data center customers from shifting infrastructure costs onto residential ratepayers, with 7 more pending. Energy alone has fielded roughly 22,000 megawatts of data center interest against a system peak of about 9,000 megawatts. A mismatch that leaves utilities building real infrastructure against speculative demand that may never materialize. Quebec's version of the same problem is just more visible because a government-owned utility that spent years marketing cheap power is now publicly reversing that pitch rather than quietly rewriting tariff schedules behind a regulatory docket. For executives evaluating power-rich markets anywhere, from Quebec to Mexico's industrial corridors to the manufacturing markets competing for the same U.S. megawatts, the lesson is the same one showing up across the constraint economy this week. Cheap power and available power have stopped being the same fact. A jurisdiction can have abundant, genuinely clean generation and still choose to ration it once demand outpaces what that abundance was ever sized for. Site selection models built on last year's rate sheet are already out of date in the one market that used to be the industry's easiest answer. Sustainability Soundbites Energy coverage is sponsored by Amazon. Visit the link in our show notes to learn more about Amazon's Spotlight on Energy. For sponsorship opportunities with Environment and Energy Leader, please reach out to a member of our team.